Hello, forex traders. Hello, hello. It's nice to be with you guys again. This is Living on Forex, live from direct. This is 1 month since I saw you last. I spoke with you guys last. I'm sorry, I have been very busy with trying to set up the office, trying to put one or two things together so that we can help as much traders as we want to mentor them one on one. So, like as I told you from my last video, the office is ready, the office is set, it's now open for trading. So all you traders who are in the city of Port Harcourt, Rivers State, Nigeria, you can come for one-on-one mentorship. As we mentor you, we also help you grow your account. And then we always be trading live together, calling out trade, and everybody will take the trade. That's what we are in the office. We are not just here to come and do hypes for you guys. And some people will now say, yeah, they only teach, they don't practice what they preach. We teach you how to trade the market the right way, and we'll also show you how it's done by taking live trade. So you guys will learn and learn very well. So guys, you're welcome to Traders Focus episode 18. This is the 18th episode of the Trader Focus. So what are we going to talk about today? Today we are going to talk about the pairs, what is happening in the US economy and how it's actually affecting the forex market right now. And then we're also going to talk about price correlation, how you can use correlation to decide on the pair you should trade. Not all pairs are tradable at a particular time. That is what you guys need to understand. Not all pairs are tradable at a particular time. Sometimes a pair will just be ranging and it's actually not moving anywhere. So if you start trading that pair, you end up placing a trade and your trade will just be running for 7 hours, 8 hours. It has not done anything serious. Is it that will be in little profit and then go back to loss and then go back to little profit, go back to loss? That is what just you should be doing. Why other pairs will be busy trending and here you start regretting. Why didn't I trade this other pair? Why did I take the trade on this pair? Price correlation will help you to decide the better choice so that once you take your trade, the trade will move instantly. So that is what we will be trashing today. So before we move to the nitty-gritty of the video, please like, subscribe, and share this channel. So before long, I want to share my chat, I want to share my screen with you guys. Please like, subscribe to this channel, ASAP. Want to go. Where. You are welcome inside of my screen. This is Living on Forest, live and direct. So let's go to let's go to talk about what is actually happening in the US economy right now. So from what we expected that the the Fed will cut interest rates. And we were also expecting that if that interest rate is caused, all things being equal, that dollar will surge, dollar will tank, dollar will drop. And which means that if that is the case, Euro USD is going to fly to the upside, GBP USD is going to fly to the upside, gold will keep flying to the upside, UJ will set for reversal, USD card will be flying, and all of that. But where the US has been the Fed has been diplomatic in their interest rates and their statements. They are neither here nor there, and this is actually affecting the forex market right now. You agree with me that a lot of persons are losing money, especially those who are trading gold, euro, USD. They are losing their trades, frequently losing their trade right now. So what's really happened? What transpired? What's the problem? If you notice, last Friday, today is 5th of November 2025. Last Friday, there was interest rate cut. There was interest rate that was announced. So let's go back to our news calendar. This is Forex Factory. This is what I use, Forex Factory. So let's go to last week. And see what I won. So last week, last week when Wednesday, Thursday, okay, we are looking at the one US had. Okay, Friday, no. When was that interest rate announced? I think Wednesday. That should be Wednesday. Okay. Yes, it was on Wednesday. Federal fund rate. Now, if you watch, the federal fund rate cut was the same from the last previous, from the forecast to what was announced was the same. And then this was even lower than the previous one that was 4.25%. Now, when the Fed gave out their FOMC statement and press conference, they were neither here nor there. And what happened? So that the interest rate was actually cut down, but it didn't affect the market. Why did I say so? The market did not move as expected. It was just dropping, dropping, dropping. In fact, gold dropped, Euro USD dropped. See the drop from last week. Let's go daily candle. You see, the market was dropping and dropping. See all of this drop. Last week, Wednesday, see all these candles was Wednesday. A massive drop on USD. The same thing happened on gold. The same thing happened across the board. So it's kind of deceitful. And a lot of persons a lot of accounts were blown. I happen to be in some Telegram channels where I've been seeing how people post signals, and we'll see how people have been losing their trade, especially those who are trading gold. Gold has been. I want to go to gold now and show you what I want with gold, why you should avoid trading gold at this particular time. SAU USD. As a top-down analysis, we're able to know what is happening in a pair at a particular time. Now, you see all of this. You should know that within this level, gold has entered into a range for how many days? This is 1, 2, 3, 4, 5, 6, 7 days. Gold has been ranging. So until gold goes out of this range, you shouldn't trade gold. That is why you are neither profitable. Those strategies you have been using to make a gold has not been working. You'll be asking yourself, what is the problem? This is the problem. So we top-down analyst traders, we know when a pair has entered into a range. Like I told you, every pair trends 40% of the time and 60%, every pair trends 40% of the time and ranges 60% of the time. So most of the time you get a pair ranging than trending. So gold has been trending for a while and has been giving a lot of people profit. And we are seeing some signs of a drop, signaling like a reversal setup on gold. You see how this market drop, and now it has entered into a range. So for now, and if you look at what is happening in the US economy is refurbishing, and wars has begun to decrease around the world. Gold thrive when there is uncertainty in the world, when there is fear, when there is war, gold flies to the upside. But because of all of those things has been subsiding, we are hearing less of wars now, and those who are already in war, they are thinking of how to go into resolution and end the wars and all of that. This is causing the reversal on gold, and then we are seeing uncertainty. Gold has been consolidating, has been constantly ranging. So gold has entered into this nasty range. So all of you guys who have been trading gold, please, 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 for now, avoid trading gold. And that is why your gold strategy has not been working out. You enter a sell, the market will buy. You enter a buy, the market will sell. This is the reason why you shouldn't be trading gold at this time. So those of you who have been asking, why am I losing? My strategy has been strong, has been well. Always check. When you check a pair and see if it's trending, you want to be trading a pair that is trending, one directional, either this or this. That's the kind of trade you should be looking at, pair you should be trading, not a pair that is ranging. If you trade a pair that is ranging, if it starts ranging on a higher time frame, your guess is that in the lower time frame, it will not go anywhere. Even if you might see a trend, that trend will not go anywhere. That is the fact, that's the truth. So when you come out to the daily time frame, if a pair has entered into a range on a weekly, monthly, and the daily time frame has been ranging, just avoid that pair for the time being until the market breaks out of the range. Then you can start trading that pair. But for now, we will wait until gold breaks out of this our rectangular range. Then we can now start trading gold in that direction that it broke out. But for now, gold should be avoided. The same thing goes to Euro USD. In fact, most of the US pair now should be avoided. Don't trade them, please. Don't trade US pairs right now. Avoid them. Unless you have a one that is trending clearly. Euro USD, the same thing I boxed. If you notice, I boxed this stuff here because it has also been ranging for some time. That is why those your strategy will not work out. Although we have seen a breakout, but we still observe it to see if it's very sharp because I don't like this kind of movement. It's not smooth. If market is breaking out very well, you see a very clear, sharp, neat move, like something like this, those aggressive candles. But what we are seeing is we are seeing this kind of a jerky move, which to me doesn't look like a clear breakout. So for now, Euro USD shouldn't be traded. If you go to DSY to be able to decipher what is going on, because DSY is an inverse of Euro USD. DSY is giving us a clean, at least the move in DSY is clear a little bit, and we see that it broke out of his range in the upper side, signaling that the dollar is gaining strength. Okay, so if the dollar is gaining strength, then you shouldn't be trading gold for now since gold is in range. Gold might start selling as well, but we just want to wait. Maybe the market is waiting to break out this level. If it breaks out this level clearly, I feel Euro USD will now start moving clear, smoothly, and GBP USD. Why I left GBP USD in my watch list because it's showing it's still trending. The move is still smooth to the downside, so it's showing selling. Okay, it's showing that the market will continue to the sell side, but intermediately we'll have buys, and that is why you saw this little trade here. This is 84 pips trade, which I'm looking at taking. Then okay, so guys, that is what you should be doing now. So what pairs should you be trading? You should trade more of the JPY pairs. This is my personal recommendation because the JPY pairs are what is actually moving. This is what I want in the market right now. The JPY pairs are trending very, very well. So these are the kind of pairs you should trade. One directional pair. See, this is a bullish move. So when you're asking is in a bullish move, always trade the pullbacks and take it to the upside. If you look at GPP, sorry, you should be trading JPY pairs, the NZD pairs right now. If you look at Euro JPY, the same thing. The market is trending to the upside. So those are the pairs I recommend you should trade. Trade more of the JPY pairs and the NZD pairs. For now, leave the USD pairs. Let's see what USD have for us because the news that are coming in back to back in the US economy is crazy. It's very, very crazy. You don't want to touch it. Sometimes they hunt like 50 pips stop hunt, 100 pips stop hunt, which is very, very crazy. No matter your loss, your lot size and your stop loss is still going to come for you. So please, the manipulation there for now is too much. So let's avoid it for now and focus on the JPY and the NZD pairs. Those are the pairs that are very clear, directional, and you can spot the pullbacks and make your profits and go. So guys, that is that for that. So now we want to talk about correlation. How can correlation help you to trade, to select the pair that you should trade at a particular time? Now, the reason is when you want to trade, you are prepared to trade, you come on your trading platform, you now look. If you want to trade the euro, a pair, maybe you see euro NZD, you want to trade. Before you trade euro NZD, go and check the euro pairs across the board. What are they doing? If they are doing something similar, then you know that something is. If they are buying, they are all buying Euro USD, Euro NZD, Euro JPY, Euro CAD, Euro CHF. They are all buying. And then that Euro AUD, the one you want to trade, is not buying. That is the pair you should avoid totally because if you trade that pair, you're going to lose. Correlation will help you to know that this thing is not acting, it's not acting right. other pairs are going this direction, other similar pairs, other correlating pairs are going like the same way. Why are you not joining them? So that is the pair you should cancel. So let's do a practical now. Let's assume that this is GBP USD. Now, if I go to a daily time frame from the daily time frame standpoint, I'm seeing that the GBP USD is kind of a downtrend. Yes, it's a downtrend. So what I'll have to do is I have to look for the other GBP pairs. Want to see GBP NZD. So what is happening in GBP NZD? GBP NZD in this particular one is indecisive, okay, because it broke, it's not buying. For how many days it has been buying, while the other one for how many days have been selling. So we have two opposing decisions. So let's go to other GBP pairs to be able to know what is going on, which one is right or which one is correct. Let's go to GBP card. GBP card now, okay, GBP card is in line with GBP USD. It's coming down. It has been coming down for ages, and then the market has stalled. Okay, so GBP card has aligned with GBP USD. Let's go to GBP CHF. Okay, so GBP CHF is kind of sell, but it's checky sell. It's not as smooth as possible. Fine, which is also in line, but not very clear, but it's in line with GBP USD. So we've got GBP CHF, GBP AUD, the same thing, the same thing. So if all of these are showing you the same, see GBP AUD is showing you very smooth move, GBP card, GBP USD, but GBP NZD is kind of indecisive. It's trying to form a structure. Maybe probably a set structure, which is a head and shoulder, but it doesn't have this kind of smooth move to the downside. So when you've finished checking all the GBP pairs, let's finally check one more. GPP, we have GPP check, GPP card, GPP USD, GPP NZD, we've checked GPP NZD, GPP JPY. So let's go to GJ. GJ, okay, GJ is also, it's not as smooth as possible, it's just in between, indecisive, the same way GBP NZD is behaving. So guys, from this now, from all of this now, you're going to see that out of 7 pairs, 2 is behaving, is not behaving normal, while the other 4 is aligning. So you should know that GBP JPY is out of it, GBP NZD is out of what you should be trading. So you should be trading, your trade should be between GBP card, GBP CHF, GBP AUD. Those are the pairs that are aligning. So you now, out of this trade now, you take the smooth, the ones that is very smooth, that is the trend is so clear, like the GBP card or GBP AUD. Let's say AUD. You see, these are the ones you should be trading, GBP AUD or GBP card. For a sell, you look for a sell. So you see, so when you trade, when you take trades, like when you decided out of these two, you choose the one that you want to trade. Anyone you choose within these two, you are good because the market is acting well. You see the smooth move, see the smooth move to the sell side, see the smooth move. You don't want to trade GBP check, which is, although it's selling, but the move is not just like this. Check is not as smooth as all of this. So GBP AUD, GBP CAF, GBP card or GBP AUD, these are the two trade pair you should now think of trading. So you do your markup, you do your draw your support and resistance and all of that, you do your technical analysis and wait for the market to come to your levels and make decisions. When you take trade from these pairs, then you are setting yourself already in a very good pair that is likely to move instantly when you take your trade. Not taking trade on pairs where when you take a trade, 7 hours out later, the market will still not go, will not have gone anywhere smoothly. So this is how you use correlation to check your trade, to make your trading decision. So guys, I want to show you something again. Okay, Chef JPY. Like I told you, JPY pairs are what you should be trading now. So this Chef JPY, we know that it's on the buy side, it's on the bullish move. So we just wait for the pullbacks, and we got this pullback here, and the market transitioned, and then the market is set to move back to the upside. At least market is coming back to touch this red bar. So we are already on this trade. I think we are on drawdown, but the trade has now started playing out, and in this we're already on profit here. Okay, so we're already on profit. So guys, if I take, so I'm pursuing already, the market has gone, has ensued. We are already in profit taking this trade already. So guys, that is how you make your selection. When you make your selection, the market moves immediately. So if you are this day trader that comes in every day to the screen to want to pick trade, you have no business going for those pairs that are ranging. Go for the smooth pairs like this. When you take trade, you know that the market will just move immediately. And this is what correlation will help you to do. So guys, I've been able to guide you through what is happening in the forex market right now. As a way of recap, please avoid trading the US pair now. Please avoid trading the US pair if you don't want to cry. I know some of you have already started crying because you have lost trade. Even some professionals, I see them losing trade lately because trading the US pair, especially those who are trading gold, you've been losing because when you enter buy, gold will sell. When you enter sell, gold is going to buy. It's highly unpredictable because the market has entered into a phase of range. We do not know how long that range phase is going to last. But as long as it lasts, we're not trading. I've removed gold out of my watch list. If you watch my watch list, I've removed almost all the US pair from my watch list, apart from the USD, GPP USD because of the move is still small, and then USD JPY, GBP USD and USD JPY. But I'm not still trading them. That they are in my watch list. I'm not still trading them. Though USD JPY is fine to trade, pull back because it's still on the buy side. But however, I'm still avoiding trading. I have a better option because of the uncertainty in the US economy right now. I'm sticking with the JPY and the NZD pairs. These are the pairs that are behaving properly now, and I want to be on those ones. The ones that the news will not come and distort the trend. Because that's what we are seeing now. Once you are in a trade, a very good trade, you'll be in profit. The news will come 1:30 p.m. in the afternoon or 2 p.m. in the afternoon. They will release the US news and you see the market changing. Today, we also have a very serious news coming up in the US economy today. Let's look at the news that is about to come out today. I think that should be by 2 p.m. today. 2:15 p.m. we have the non-farm employment change. Remember, this week is an NFP. By Friday, the NFP is going to come out. We also have the ICM service PMI. These are major news that is going to affect the market by 2:15 and 4 p.m. We have news coming up in the US economy, and then by 7, we have medium impacted news. President Trump is going to speak. All of these news are going to affect the US Fed, and we do not know what it has in store, whether it's going to come and hunt and distort the trend. So for you to be on the safe side, just avoid trading the US Fed for now. When we have a clear move, when the DSY has shown us a clear move, and we will now know, we'll now come up here and tell you, by then we must have gotten a very clear setup. We'll now come up here and update you. But for now, stick with the JPY pairs and the NZD pairs. So that is what I have for you for this video. I want to like now to unshare my screen. I want to unshare my screen. Okay. Okay, I want to unshare my screen right now. All right. Thank you very much for being true to this video. I appreciate you all guys that has been with us so far, that those who have been sharing our video, who have been finding good insight on what we teach here. You'll be sharing the video. Please keep sharing, keep liking and subscribing to our channel, and we'll promise you that will never get you disappointed. But for those who are in River State, you want one-on-one mentorship, please kindly come to our office, drop a message asking for the direction to the office. I'm going to give you. But if you want online mentorship too, you can just actually drop. I'm going to show you. For those of you who have never withdrawn from trading forex, since they've tried to trade forex, they say they've never withdrawn. You want to withdraw. You want to win a trade and withdraw. DM me. I'm going to teach you and I'm going to guide you. And we are going to place a trade together. And then, even if no matter the size of your account, I want to show you something. There's an account I am currently now, which is a $10 account. Somebody gave it to me that I should take trade on it. Okay, let me share. I think this is the account. Okay. Okay, you are welcome inside of my street. So this is the account. As you can see, this is a $10 56 cent account. I've already taken a trade on this account. This is a Chef JPY buy, and then the account is running on $6 profit. So if you add that to the equity, you're seeing as is $17. My target is is already visible. If the market goes to my predicted direction, I'm gonna make my target is around I think that should be $30 target. Okay, and I'm risking around $12. So that's almost 1:3. Close to 1:3 trade. So no matter the account size you have, no matter the account size you have, you can withdraw. Just come to me. I'm not asking you to put $10 unless you're ready to lose the $10. If just put a money that you can afford to lose, that's forex for you. Generally, you trade with what you can afford to lose so that emotions will not be attached, so that you allow the trade to breathe, and then you are good to go. So this account too is account that I've taken a trade. It was on drawdown. The market is coming up now. We know that the market is going to come to this point and hit our target. So no matter your account size, you manage any type of account, $100, $150, $300, $200, $500, $50. I don't manage $50 for me. But if you want me to mentor you and you have $50 account, you want me to call a trade that you place a trade, fine by you. We can, as we are analyzing, you can have a trade and I tell you enter. But if you want me to manage the account, we have minimum of $500. We now come into an agreement. I'm happy to grow the account. That is how we trade. So guys, thank you for all of that. Thank you for being through to this video. And I will see you soon. And I promise to get you a new video that's going to give you insight on what is happening in the market and what you should be trading. But right now,